Bitcoin will solve the same problem for everyone, and that it doesn't really matter when each individual adopts it. Now, the people who adopt it early and hold longer will, I don't want to say perform best, they will have the best opportunities to preserve and grow their purchasing power.
Welcome all to the 30th episode of the podcast Store of Bitcoin. And in this episode, we have the pleasure to interview Parker Lewis. That is a Bitcoin, as you know, is a Bitcoin educator, writer, and the mind behind the influentially, gradually, then suddenly book, firstly series, and then a book. As a former head of business development at Unchained Capital, Parker has played a key role in advancing Bitcoin native financial service and educating both institutions and individuals on why Bitcoin matters. Known for his clear, principled thinking and ability to break down complex topics, Parker brings also a sharp economic lens and a deep conviction in Bitcoin as a tool for long-term financial sovereignty. We are very excited to talk about Bitcoin adoption, monetary theory, and why, in Parker's word, Bitcoin is inevitable. I'm very happy to have you here. Hi, Parker.
Hey, Alessandro. Thank you for having me on. Look forward to this discussion.
Hello, everyone.
Hi, Francesco.
Hi.
So, as I said in the intro, Parker is the author of Gradually, then Suddenly, a book that I strongly recommend for people that are in the journey to understand Bitcoin and to want always. You never finish you're never deep enough in the rabbit hole. So definitely, this is a book in the list. And we can start with the title, asking you, Parker, why you chose this title.
So the origin of the title for Gradually Then Suddenly was borrowing from a common saying from a book written by Ernest Hemingway called The Sun Also Rises. And in that book, one character asks the other, how did you go bankrupt? And the other character answers two ways: first gradually and then suddenly. And the way I relate that to Bitcoin is that it's not only how an individual goes bankrupt, it's also how a country goes bankrupt. That's how a currency hyperinflates. And the other side of currency hyperinflation is Bitcoin adoption. Bitcoin adoption doesn't cause currency hyperinflation, but it's also how people come to understand Bitcoin, that it's a gradual process and then something will click for them. The pieces will start to fall into place. And once that they're able to see Bitcoin for the first time, the hardening of it, the inevitability of it becomes just that, inevitable. So the idea of currencies hyperinflating, if you think about any hyperinflation episode that's ever happened, it didn't happen when everyone figured it out at that suddenly moment. It happened in the years and decades preceding it. And so the same is true of Bitcoin adoption. So that's really where the name came from.
Thanks. Also, seeing also retrospective, how I learned about Bitcoin. Also, it was not really a critical moment when I said, okay, now I got it. But reading at one point, it formed inside me that, okay, now I know. It was not really one sentence, but after a certain level of education, a certain number of books and articles, then you say, okay, I grasp it. Similar to this, gradually spending a lot of time.
Like in my view, when it comes down to the individual starting to understand Bitcoin, there's something that interests them. They start to consume content. They listen to podcasts. They read a book. They might read two books. But generally, it remains that Bitcoin is difficult to see, and it's something they'll connect something in their personal life. Because if we accept that probably 99 out of 100 people still cannot grok Bitcoin or cannot understand how it can be money, something in somebody's mind has to turn on where, it's not, like the deep understanding of Bitcoin, because it is a rabbit hole. It's a very deep one. It's a never ending one, but there is this gradual process of accumulating knowledge, and then there's generally this thing that turns onto your mind where you just say maybe, like where something connects, and the possibility where you previously couldn't have made any sense out of it has now been broken down, and your descent into a deep rabbit hole begins. So, yeah, I think that's most people's experience. It was mine for sure.
Okay. Yeah, same. I think for most, it's curious and interesting that many have a similar path. Exactly. Also for you, interesting that you wrote these articles in 2018 and 19. That means that you were already in Bitcoin years before. So when very few people were into Bitcoin.
Well, I think that's something else that's probably true of everybody, that everyone always feels late to Bitcoin.
Yes.
That at the time when I was starting to understand it in 2016, I felt late because everyone who was there telling me about it was there before me. And then if you zoom out in 2025, realizing that Bitcoin is only 15 to 16 years into a global monetization event that will likely last thousands of years, if not longer, that everyone that is starting to become interested in Bitcoin even today, or certainly when you guys became interested in Bitcoin, whenever that was, I'm sure it might have felt to a certain degree late, but the truth of the matter is I was early then, you guys were early whenever you decided to adopt Bitcoin, and anyone that's thinking about it today remains very early to the equation in the grand scheme. So, yeah.
You bring a
Totally.
great, you bring in a great argument, if I may chime in, because it's supposed to be, it's gonna be money for the people, but the majority don't get it yet. So we have on the one hand, U.S. government embracing it, but maybe the majority of the population not really. So we have a feature of Bitcoin, which is volatility, and which is the result. I mean, the feature which saves the people, the investor, from the debit cycles. And the debit cycles are caused by the government. I saw your presentation in institutional circle a few years ago, and as I'm quite sure that as individuals don't get it, even institutional don't get it very well still now today. So I was thinking, how do we envision? Because we all know the risk is hyperinflation. Hyperinflation is not something slow; it's something very quick. So, how do you think the individual, aside of the usual game theory, which is who gets it first, benefits from it, but their understanding is dampened by the government, all of the things which are not true being said Bitcoin. Do you think that if we go in a hyperinflation system, or monetary system, and then it exacerbates volatility because Bitcoin will appreciate massively, and that will leave many people behind, and so it will not be effective as a saving tool? What do you think about that?
What I would say to that is that that Bitcoin will solve the same problem for everyone, and that it doesn't really matter when each individual adopts it. Now, the people who adopt it early and hold longer will, I don't want to say perform best, they will have the best opportunities to preserve and grow their purchasing power. But I also would, be remiss to not mention that fiat currencies do not hyperinflate because Bitcoin exists. It's that the fiat currency is going to hyperinflate because it can be produced at no cost, and that ability to create money out of thin air is what causes the economic fabric of the system to deteriorate and ultimately break. And then Bitcoin here as this solution, as the off ramp to say, hey, you have this problem. Everyone in the world is suffering from it. Whether you adopted Bitcoin in 2016, 2017, 2018, 2019, 2020, Bitcoin stores value for the reason that more of it can't be created. It's also volatile for that reason, that there's no adjustment to the supply. And that if two things are true at the same time, that Bitcoin is not causing fiat hyperinflation, but fiat hyperinflation is caused by the printing of money at no cost, then that is related to people seeking out other solutions, the best one of them being Bitcoin. And I'm not saying the best one of them saying, Bitcoin vis-a-vis other cryptocurrencies. It's the only money that's a solution, but people seek out real estate or other passive things to hold that aren't money, because their money is degrading. And as more people figure out Bitcoin as its price rises or its purchasing power increases, then it becomes more obvious to more people, such that in a fiat hyperinflation event, when it becomes obvious to people that their currency is hyperinflating, they have the opportunity to opt into Bitcoin at whatever time they realize that. And from that point forward, even if Bitcoin is volatile, their purchasing power will be preserved into the future. And that is really the permanent solution to their problem. And so the people that figure it out earlier may, quote, do best, but in reality, the economic system, people who have Bitcoin are dependent on people providing goods and services that have not yet figured out Bitcoin. In that sense, we're all in this, so people benefit. The real tangible value of money is being able to preserve purchasing power in the future, but ultimately to exchange it for goods and services. So the more people that figure out Bitcoin increases in value, but it's not just self-referential. It's that the economic system is growing participants. And as more people value Bitcoin can do more things. It can store value for more people, can coordinate trade amongst more people, and ultimately build a more stable foundation for every local economy and ultimately the global economy. So the short answer is that it might appear to those people who are adopting when their currency is hyperinflating, it's going to do the same thing. It's going to store their purchasing power, and you might have been better off if you had done it earlier, but you're just lucky that you have a solution, because if Bitcoin didn't exist, then a currency would just hyperinflate with no alternative.
I see. Yes, so the fact that they can in any way rely on the better form of money, even if they will be priced in Bitcoin something, and they will benefit anyway. Of course, people the earlier the better, but even them they will utilize indirectly. But if we think about nation states, there will be a rush to, if the US now is going to actually purchase all of this, many will follow. There could be some a rush digital gold even from the state, leading to accumulation of Bitcoin. And don't you are not you a bit worried about that once the government actually understands the story of value truly, and then they might want to take the Bitcoin from the people? That's all the question, but
yeah. So on that point, I think that one of the ways that people describe Bitcoin is that it's a currency for enemies, and that it is permissionless, resistant to all forms of censorship, and at the end of the day, it is neutral. It is the only form of money that can act as a currency or operate as a currency, function as a currency, however you want to describe it, without some central issuer. And because of that, it incentivizes any and all adoption. And so for Bitcoin to be viable, it needs to be able to be a currency for everyone. That includes governments. I think that it's inevitable that if you accept the premise, and I'm not saying you, but say anyone listening to this, if anybody accepts the premise that Bitcoin is a form of money that can't be printed, and that its source of fundamental value, or where its fundamental is derived, is from its fixed supply, then that will be of value to literally everyone in the world. And at the end of the day, governments are just constituents of groups of people, and they have operations that need to be funded. And yes, there's always the risk that a government might try to co-opt a system, but as Bitcoin grows larger and as there's more competing adversarial interests involved, it becomes actually stronger in those environments. The larger Bitcoin becomes, the harder it is to change, and that there is no way to separate money from the state without the state adopting Bitcoin. because the alternative is that the state is running their own money, and that is the system that they have a monopoly over. And so I think it is this kind of, I mean, it's not a paradox, but the idea is almost paradoxical that the only way to separate money and state is for the state to adopt Bitcoin. But that is true.
Is one totally. It is one of the many counterintuitive things on Bitcoin. For example, energy usage, that it also helps actually the environment, or that in a fixed supply of money we have abundance through scarcity of money. For people who studied Keynes economics, it's a paradox and it's counterintuitive. That's why also it's hard to understand Bitcoin. I think also for some, I feel that sometimes there is a misunderstanding of what does exactly mean separation between money and state. Doesn't mean that the state cannot use the money, but that the state cannot print more money. And actually, as many are now, they are saying we cannot have Bitcoin as monetary system for the world without the involvement, a deep involvement of the institutional and the political world. Firstly, for the system to work, and also for having the global store of value. I think now many more people are adopting Bitcoin, like saving some in Bitcoin. But if we count the amount of people that can have a conversation like us three on Bitcoin, we are still in a bubble. We are maybe 0.01% of the population. And most of them, the others will not understand Bitcoin unless it's the financial world to tell them that it's safe and they could invest. Despite of maybe what we say or how many books we write, we can reach a certain amount of population, but many will come later.
Yeah, I mean, I agree with that. I think that, with the separation of money and state, it's not just that the state can't print the money, it's that the state is not in control of the money.
Exactly.
Yeah, and those two things do go hand in hand, because when you're in control of the money, then you can print it. But if you can't print it, or if you are truly not in control of it and that you can't co-opt it, then the output of that is that it's money that can't be printed, and that if anyone were to accept that it's an inevitability that an individual will adopt it, an operating business that produces goods and services will adopt it, a financial institution will adopt it, and that inevitably governments will adopt it, that it's necessary that Bitcoin has to work in all of those circumstances. And by working, it means that no individual, no corporation, no government, no groups of governments banding together could control or co-opt the system. So if you accept that adoption is inevitable, and that for Bitcoin to work, it has to be resistant to arbitrary change or resistant to censorship, with all of that coming adoption, that it just makes it, from whatever time horizon it is, that all of these interests are going to be involved. And then what you mentioned, I think, is also true, which is that as more mainstream adoption occurs, that begets more mainstream adoption. There's a certain set of the population that might not buy Bitcoin if not for the fact that they could point to and say, oh, well, Blackstone has an ETF in the United States. This can't be all of these things that all these people said Bitcoin wasn't, because why would BlackRock be doing it? Or you could use the same example of the U.S. government. People said, well, Bitcoin will be banned, or that Bitcoin is for criminals. And now the U.S. government has, at least by executive order, created a strategic Bitcoin reserve, and there's legislation working through the Congress in the United States to instantiate that executive order as law. In the state of Texas, where I live, we have actually passed, and the governor has signed, a strategic Bitcoin reserve. So it's not just the United States, it's state and local governments as well, but it will be governments all over the world. And that it's a microcosm, or maybe it's a macrocosm of microcosms. When individuals that have adopted Bitcoin in your personal life, and they explain Bitcoin to you, and if it's one, you might think that they're crazy, but then if another friend also comes to the same conclusion, and then another friend, then it becomes easier for the next person, because there's more data points of people who have evaluated this question and then come to the conclusion that even if Bitcoin is hard to see and hard to understand, that all of these people continue to line up and adopt it, that a large corporation or a financial institution or a government is that being amplified up and sends a louder signal, and that will then spur on more adoption. So, and that will continue to happen as each corporation falls, as each institution falls, as each government falls, not in the sense of falling, but in the sense of capitulating and adopting Bitcoin, until the vast majority of the entire world adopts it. Bitcoin's not the thing that's volatile. Bitcoin is the thing that is pricing everything else, and everything else is priced in. So I think it's both inevitable and it drives further adoption because it makes Bitcoin easier to adopt.
Do you see? You have a question, Alessandro?
Only one comment. Yes, in fact, I agree, especially with the adoption for the new people. It's not just one person telling them, hey, look at Bitcoin, but maybe they have a friend. Then after 2 weeks, they hear in the TV that Bitcoin is a new all-time high. Then they have a colleague who read a book and talk about Bitcoin. Then there is Ray Dalio now saying 15% in gold and Bitcoin. And at the end, they decide, okay, maybe I have to pay attention on Bitcoin.
Yeah.
Francesco, please go ahead.
As you know, our podcast is called the Store of Bitcoin, meaning that we want to highlight the store of value. We think that is a beginning of the story of value phase, so the evolution of money. But I wanted to reflect a bit with you, because given that is getting into the financial world, So do you think that all of the DeFi things which were built for other cryptocurrency, but let's not talk about the traditional financial system, and so all of the application thinking about the lending, but done in a certain way, maybe someday yield, everything which the sophistications of the traditional finance. Do you see that happening on top of Bitcoin? Because that could be a use case. And also another use case could be the frequency, so machine to machine transaction, high frequency transaction. So before we reach a medium exchange where people actually used to buy at the grocery, do you see additional use case in terms of sophistications, TradFi-like, or also speed of payments for Bitcoin on layers?
Sure. Yeah. So the way I think about it is, I think in the long term, and one of the chapters of my book is called Bitcoin is the Great Definancialization, that as more people figure out Bitcoin and realize that they've been solving various problems that they have in terms of storing value by not opting out, but holding less money than they otherwise should be holding because they know that their money degrades in value, and that they decide to buy a rental house passively to store value in the house, and functionally that is what I would think of as a monetary substitute. Or they buy stocks and bonds as monetary substitutes because there's this overarching knowledge that the money is losing its purchasing power. So in the long term, and then also to say that first and foremost, someone needs to understand why Bitcoin stores value in order to adopt it, that is its primary role, but that ability to store value is necessarily connected and attached to the ability to exchange it in the future, and for a large group of people to, in the case of Bitcoin, to demand a form of money that can't be printed. So in the long term, I see this hyper financialized world that's existed in the fiat world largely because people have been trying to outrun and engineer solutions to outrun inflation, that there's less financialization in the Bitcoin world. Now that doesn't mean that there's not lending, and that there aren't capital markets and there aren't stock markets. There will be, in my view of that future world, if people can reliably save in a form of money and transact in a form of money that can't be printed, that the system, like the overall economy, will grow, but the system of that is, or the part of that system that's financialized, will be smaller. It will be a small fraction of what it is today. Now, one of the trends that we're seeing in the world of Bitcoin are these Bitcoin treasury companies that are really exploiting the fiat. Not exploiting is a bad term. They are capitalizing on a arbitrage in the fiat world to tap fiat capital markets that are a bottomless pit because fiat can be printed so easily, and using that money to buy Bitcoin. And in this interim stage, one could call that, if in conjunction with Bitcoin ETFs, that that Bitcoin is becoming more financialized. I think this will ultimately be a short-term trend. Not that these companies won't do very well and Bitcoin ETF holders won't do very well. I always recommend holding Bitcoin directly, either with a custodian that you trust, or even better, holding your own keys. But recognizing that there may be some increase in financialization in the Bitcoin world, but overall it's driving this definancialization trend. Now, if Bitcoin, first and foremost, or the way I would describe it is that someone has to understand why Bitcoin would store value, or have some conception of that before they're willing to hold it. That the way I think about it is everyone is on a curve. The people that have been holding Bitcoin since 2010, 11, people that held Bitcoin long before I did, or when I started holding Bitcoin in 2016, as your knowledge hardens and deepens, you logically start to realize that if you were just going to accept fiat payments and then convert it to Bitcoin, that you would be better off just accepting Bitcoin directly if you could. And so the person that is just evaluating Bitcoin for the first time today in 2025, or seriously going down the rabbit hole, they're not logically going to connect that they should also be demanding as a form of payment. And there's no sense in enforcing that. They will get to that point as they really start to see the field. But in my long term, and it's what I'm working on right now. I'm working on Bitcoin payments at Zaprite with this knowledge that someone first has to understand why Bitcoin stores value, and then they will want to be paid. And those two things are generally not simultaneous. They're generally years apart. But both of them are ultimately inevitable, and that one begets the other. As more people figure out why Bitcoin stores value and adopt it, more people are turning around and saying, pay me in Bitcoin, because time is passing and more people are getting down that curve of having their knowledge of Bitcoin hardened. And the grocery store down the street from me is working on turning on Bitcoin payments, sometime in the next few weeks. And so it's that those are going to be few and far between, but they are also going to grow faster and they're going to accelerate, because as the population density of Bitcoin grows, more and more, there will be basically more opportunities for two people on the other side of an exchange to have Bitcoin. And so I think that the predicting exactly when say something like Bitcoin payments reach escape velocity is hard to predict, but it's also inevitable if the adoption of Bitcoin as money is inevitable. And not to say that there's not some small probability that something occurs, but realistically, because of the incentives of the system, everyone in the world has an incentive to have a form of money that can't be printed, and everyone has an incentive to deliver value to the Bitcoin network or to accept Bitcoin as payment, because it's the most efficient way to acquire it. So I think it's both one and the same, but recognizing that it's an adoption curve, and the way that people adopt Bitcoin is similarly a curve, and they might buy some for fiat, but as 1 out of 100 hold Bitcoin goes to 2 out of 100, goes to 10 out of 100, goes to 20 out of 100, the opportunities for direct trade only increase, and the tools are getting better and better out there. And so, in my mind, sometime in the next 10 years, everyone's operating on a Bitcoin standard. That means everyone is receiving Bitcoin as payment as well.
In 10 years?
Yeah.
Okay.
I mean, I'm optimistic in humanity, where it says, hey, if Bitcoin is between $2 and $3 trillion today in terms of its total purchasing power, is Bitcoin more or less likely to increase by 20 times? Or are people, and that doesn't mean, well, it could mean a combination of 20 times the number of people figuring it out, or it could mean a combination of more people figuring it out, more people that already hold it, increasing their ownership of Bitcoin in terms of other things that they hold, as well as some of the largest corporations in the world that sell, or account for a large share of the economic system, can that increase by 20 times over the next year? And I think about, you know, the 20 times figure is saying, if it is, it's either the largest currency system in the world or it's number 2 next to the US dollar. And as it becomes the clear number 2, the end destination becomes obvious to everybody, or, you know, it becomes easier to see. And that Bitcoin in adoption waves have historically increased by somewhere between 5 to 10 times. And if we go out 2 more Bitcoin halvings from now, one in just under 3 years and one 4 years out from that, or slightly under, that Bitcoin will have an inflation rate of like 0.4%, or no, even smaller than that. So it's just, you know, 10 years is a lot of time, and Bitcoin would, you know, if adoption increases by 10 to 20 times in the next 10 years, it's the second largest, if not the largest currency system in the world. And so when you back up from that, that means like necessarily for that number of people to figure it out, the price will rise significantly higher because of its fixed supply and because there's no supply response. So yeah, when I handicap the scenarios, it's hard to believe that, you know, 10 years of knowledge distributing doesn't result
Okay. Yeah,
in Bitcoin there.
optimistic but realistic, yes.
Yeah.
On the halving, also Michael Saylor said from the halving of 2032-33, 99% of the Bitcoin will be mined. So practically is already almost limited. 1% will be done in more than 100 years. So
yeah, and you know, people who hold Bitcoin, that remaining 99%, money is there to exchange value, you know. And so like some of that supply is going to become available as more people demand Bitcoin and bid its price and purchasing power up. But so the amount of Bitcoin to be mined is not the, you know, only supply that is available for purchase, but it is the aggregate dynamic drawing everything that every 4 years there are supply shocks, and demand continues to rise because knowledge continues to distribute.
true. Now that we are discussing about the what happened in the next 10 years, do you foresee there will be cycle like before, or maybe it goes up with maybe drawback of 20-30% in few months instead of 18 months bear market? Or now there is also a new theory, some people are saying that maybe we don't even have any more this 30-40% drawback. Bitcoin goes up, there is a consolidation, goes up again, but not anymore so much. But there is not anymore 30-40% drawback. Now, knowing no one knows what Bitcoin does. Bitcoin does what he wants, and we just follow. What do you think will be the most likely scenario for the next years?
So I think that the cycles in Bitcoin are ultimately a function of the supply shock that happens at the halving, as well as human psychology that, you know, is entirely outside of Bitcoin. That there's always something going on in the world at a different point in time that is different from the past, right? So it's never the same, but the two things that are consistent are the Bitcoin halving, the Bitcoin fixed supply, and then human psychology. And so I don't, and you know, the future is impossible to predict, but ultimately my point is that humans move in herds because we have social connections and social connectivity. So Bitcoin might go up by 40% and then have a smaller drawback and then do it again. But at some point in time, humans are going to lose their mind and have FOMO and rush into Bitcoin in an aggressive way that causes it to go too high too fast, that unlocks supply, that then causes another cycle, you know. And it might not be that same 4-year cycle, you know, it might be, but humans move in herds, and you know, one of these concepts of fear of missing out, the price moving higher is is information. It is a signal that that market participants are buying Bitcoin. You might not know who or what, you might know some of who, but you don't have a clear picture of it. But in aggregate, more people are coming to the conclusion that they want to store value in Bitcoin. And there's going to be a tipping moment where, and it might be, there might be a few more where it goes up by 40%, to say 150,000, from 100, and then draws down and consolidates and then does again. But there's going to be a moment where there's human panic that they've missed Bitcoin and they will flood in, and that will cause another, episode like 2017 or somewhere between 2017 and 2021.
Yeah,
If you
for
repeat,
sure.
Francesco, please go ahead.
Yeah, for sure could be. But the question is how much volume do they bring versus the institutional? Because if the institutional behave differently, then it offsets it, and then you don't have the bubble. So what I'm seeing now,
Well,
yeah,
go ahead.
what I'm seeing now is that since the ETF launched, there is a kind of almost perfect correlation with the global liquidity. And that is very strange because it was 80% correlated, but now it looks like more than that. And also, if you think about the cycle, it's a bit lagging. So what I think is that there could be, we go higher in nominal terms of price, but in a longer period of time. And so we have a less drawdown because if it tracks the money, it supply the liquidity, then it never goes down that much. It's always turning up because there is no debt ceiling, right? So Bitcoin absorbs a lot of liquidity. It's a global asset, but the bubbles, it depends on the volumes brought in by retail versus the behavior of the institution. So I think we are going a lot higher, but in a longer period of time. So the multiplier in the short term will be lower, but the price in the long term will be higher. Do you think this is could be a theory?
Yeah, it could be. I mean, part of my bias is the um, the like the FOMO. Just because Bitcoin has gotten larger and now the institutions are involved, doesn't mean that FOMO can't, or that I would personally expect it to become a FOMO of institutions, and also corporations, right? Like the largest corporations in the world have zero Bitcoin. I saw some statistic the other day that added up the capex of Google, Amazon, Facebook, the Magnificent Seven in the United States, and it was, hundreds of billions of dollars, and all of those companies have literally zero Bitcoin. So that there's going to become a moment, and then also in my own personal experience through this last 3-4 years since 2021, going out, combination of conferences, hosting meetups, just being in person, that there is that the Bitcoin has moved higher, but there's not this frenzy. There hasn't been a frenzy consistently. It's been moving higher, and there will be a point where a hedge fund manager who has, if you accept that, in my mind, no more than 1% out of the population has figured this out, that when hedge funds that have been resistant to Bitcoin, when they get this panic that they missed, quote, the trade, they're going to rush in large size, and it just has to be a frenzy of, like, the marginal buyer versus the marginal seller. And what we see historically is that when Bitcoin starts to move more aggressively, and I do agree, there's reasons why that a 20% move higher in Bitcoin now requires a lot more liquidity to support it. But the psychology of individual market participants extends up to large money players, and that if things do dislocate, then suppliers to the market, the Bitcoin holders, they typically pull back in that movement because it's just like craziness. So I think it's hard to, just because the way information distributes and how individuals influence each other, and whether it's Dunbar number or some derivative, that institutions are not immune, and there's just massive amounts of money that's quote on the sidelines, or not really on the sidelines, but they're not yet seeing the field of Bitcoin, and as they do in even a small meaningful way, like the Googles or Facebooks or Apples, when they decide to make a corporate treasury allocation, that's going to set off a psychology that is going to have an impact in my mind that's similar to 2017 or 2021. Like, it doesn't mean it's going to go up 20 times, but it's going to dislocate from this kind of grind higher and then consolidate. But I also expect that to continue, and I believe that's healthy. It would be more healthy if it just moved higher by 30 to 40% and then consolidated, and we could just go on about our dull, existence to increases of purchasing power in the multiples a year.
Yeah, for sure. Institutional FOMO is a variable which can happen. I mean, maybe, but if it goes the way I think, then it's what we call a super cycle. Doesn't mean that is a omega candle under X in one day. It means that it stands, and in nominal terms will be a lot higher. And so before
and
giving,
on the other side, right? Like, we just saw, a large 80,000 Bitcoin holder come out of the woodworks that no one knows who it is, and they sold. And those are the type of things that you don't expect to see. Or I think last summer, the German government sold 50,000 Bitcoin. So it's like different things can happen in the market that set off, dislocations either way. But it has been very positive to see that even in those faces or like in the face of large sellers coming out, that Bitcoin's basically held firm right where it is.
Yeah. So bullish. Before giving the word to Alessandro for another question, I want to remind to our listeners that this podcast is brought to you by collaboration with bitvault.sv. Bitvault is the first and only Bitcoin wallet solution to solve the problem of digital hacks and physical attacks, thanks to our time delay over multi-sig technology. It's like having a vault with a timed padlock which protects you against any kind of physical and digital attack. I invite you to head over to the bitvault.sv site. You can find the link below Alessandro's post, and leave your email to test the beta for free in October. Thank you very much. So Alessandro, you can go ahead.
Thanks, Parker, to share your view. And I think one comment, in case we go up to 250, 300K, then it goes down to 220. I think there will be still Bitcoin skeptics that they say, you see, it was a bubble, it crashed to 220K. To
Right.
us, that maybe we bought a 10K or 20K. Interesting. I am in debate if there will be still a cycle or not. It likely will be a mix. I think there will be still, as you said, a FOMO moment. Now, before moving to the topic Bitcoin, not crypto, do you think this, as the title of your book, from gradually then suddenly, it will be triggered by a price like 200K when Bitcoin becomes the second most valuable asset after gold and after it passes Nvidia, or 500K, or maybe when United States says, okay, we will buy X Bitcoin in X years?
Yeah. I'd say it's hard to say, like, based on a level, because 100,000 would have been for the dollar, which I think it's about 100,000 for the euro now too. That would be like, if there was a psychological level, that would be one, and it doesn't happen. It doesn't seem to have been. So I would lean less toward that. And then I think that what it's more likely to be spurred by is either the nature of a certain buyer that then induces other similar buyers. So that could be a large corporation like Google, Apple, Facebook, Amazon, Microsoft, making a decision to shift treasury to Bitcoin, or it could be government. The United States government actually starting to buy Bitcoin. That changes that changes the market psychology. Combination of scarcity of Bitcoin in terms of what's actually available for supply in the market, such that if someone was thinking about buying it, they might buy it more aggressively or sooner. And then I think it's also, like, rather than it being a specific level, it's likely a rate of change. That as Bitcoin's, it's like if it grinds higher by 30 to 50% versus if it starts to dislocate higher, like where like it jumps and then it doesn't retrace. So I think it's more like the scale of a move and how the market, like basically how the market is actually trading, as well as the nature of the buyers and the signal that sends to other market participants that maybe already are in the market or around the market, as well as to the market participants that aren't yet involved. That's either other governments in the case of the U.S. or other large corporations in the case of, if there's a move. Because one of the surprising things to me has been that since MicroStrategy, now Strategy, bought Bitcoin, then Square bought Bitcoin, then speaking of the US, and then Tesla bought Bitcoin, that there hasn't been an operating business, to my knowledge, that's a public company. That, there are Bitcoin treasury companies, but there haven't been, the like Tesla bought Bitcoin, it's an auto manufacturer. There hasn't been a GM or a GE or like I don't think there's been a large public company after Tesla that has just decided to hold a bit of Bitcoin. So I expect, I'm sure that conversations are being had all over the place, but a move by a large corporation could usher that in just the same that a government purchasing it.
Okay, thanks for this panoramic. Maybe we can now move to the topic Bitcoin, not crypto. That is the second chapter of your book. First one was about Bitcoin is money, and second is Bitcoin, so not crypto, is also one of the most important topics that Bitcoiners are trying to explain. Do you see now that the altcoin season in 2021 was much more real than now? Apart that in the last month there is Ethereum that is going up, but there is not so much more. While in 2021 there was a lot of many altcoins, there was more DeFi, metaverse, NFTs. Now we barely have any of these apart of few altcoins. Do you think this is in favor of Bitcoin educators that can also say to people, can help more people to focus only on Bitcoin without having to get wrecked on altcoin as well?
Yeah, I think so. I mean, never underestimate the ability of scammers to create a next scam that has a moment. But I do think that, or let me step back. The fundamental of what is driving everything, and I explain this in my book, is that money converges to one common medium. That consensus in money, and it's not arrived at randomly. It's an intersubjective problem. Everyone's evaluating objectively what is the best form of money. Bitcoin is confusing, but the most important property of money, and Bitcoin perfects it, is that it be difficult to produce or to create more of. And Bitcoin's fixed supply of 21 million represents this finite scarcity. No one can print money in a terminal state at all. That if it's true, and if it's not a coincidence that, one, if it's true that money converges to one common medium, and two, if it's not a coincidence that every local economy is largely run on one common currency, and in certain instances the dollar might be accepted, but there's a primary local currency, that money coordinating trade necessarily involves two people on either side of a trade agreeing on what money is. I have the form of money that you're willing to accept, and you accept the form of money that I have. That if humans are rational, which they are, that the conclusion at which they arrive in terms of what the money that they agree on as the basis of trade is not random. If all of that is true, that's what's driving the underlying fundamental of Bitcoin adoption, and Bitcoin outperforming, from a price perspective, every other asset. And that will continue to be the underlying fundamental that drives everything. So what's happened over the last 10 years plus, really since there were forks of Bitcoin before, but when Ethereum launched, and then all the copies of Ethereum launched, is that everyone feels late to Bitcoin and they want to have some quicker way to get rich. And that when each one of those copies, or not just necessarily like individual copies, but market narratives that say, oh, but this is better than Bitcoin. When each one of those fails to be true, it's not to say that somebody isn't going to come up like you. Everyone should be prepared to, when you think that every last scam is exhausted, that the scammers are going to come up with something that you're like, I didn't see that one coming. So it's impossible to predict. There will inevitably be more, but it's, as each one flames out, and as you stack together all the false promises, and Bitcoin is still there, chugging along, reaching new highs, storing purchasing power for more people, that it becomes harder to scam. It becomes marginally harder, and it becomes easier to educate. Right? There's more time that's passed. There's more people that have gone before you. So I do think people that are working on educating Bitcoin, the job should get marginally easier. But all of it is tied to the fact that at the end of the day, you really only need one form of money, and you can't store the same value, the same unit of value. You can't store that in two forms of money at the same time. You can store a percentage in one money versus another, but one is going to perform the job of preserving purchasing power into the future better than the other. And you always have Bitcoin as an opportunity cost. If you are saving some percentage of your money in an altcoin scam or some other cryptocurrency, it's going to underperform Bitcoin because it is not fundamentally the same, and money does converge to one. So the more the time that passes, the more that, rather than somebody having to explain it to you of why it's happening, but the more that the market just sends the signal that Bitcoin is preserving purchasing power for more people better than anything else, the harder it is to scam, and the easier it is for somebody on the other side of a scam to avoid it. And for anybody educating about Bitcoin to just point to the market, when you can point to the market that is demonstrating this fact, and then pairing that with the underlying economic fundamentals that's driving it, the market's still the winning vote. And the market existing for longer and longer, behaving the same way over and over again, just makes it harder to deny, essentially.
In fact, there is also Bitcoin dominance is keeping going up since 2023. It's doing higher high and higher low. Every time maybe there is some sparkling in some alts. Sometimes it's XRP, sometimes it's SUI, sometimes it's Ethereum. But at the end, there will be a new higher high. Also what I'm showing.
Yeah, absolutely. And the more episodes of that, the more people inquire or go down, or become more curious as to why that is. And then the other side is, I think that, it's probably fair to say that to this point in time, probably 99% of people that have come to understand Bitcoin have come to understand it as a combination of watching the market price of Bitcoin paired with some form of primary education or knowledge, reading a book, learning about some economic concept about Bitcoin, the fact that it has this fixed supply, how the Bitcoin network works, and why the Bitcoin network and its fixed supply cannot be undermined, or why as it grows it becomes more difficult to undermine, listening to podcasts. That's the way the vast majority of all the people that have arrived at Bitcoin as money to this point in time, or who are evaluating it, have come to understand it. 99% of people in the world, or maybe 90%, the vast majority of people at the end of the day will come to understand Bitcoin more easily as people are using it as money. So when you see the price moving higher, but it doesn't make sense, or we have a discussion about Bitcoin being money and it doesn't make sense to someone, but then they can see that food is being sold for Bitcoin, that is an education in itself, and it will only increase as more of those, data points pop up. And as those data points pop up that people are accepting Bitcoin for groceries, or, at some point there's going to be a gas station that says you can pay gas for your car or power for Bitcoin to power your home or to power your car, that is actually an education, and it will be an education that will be easier for the entire world to see. And that when those same things are not happening in the crypto world, or people realize that some lending scheme with some obscure cryptocurrency to get yield is not really what this is about. What it's about is getting the world on a more sound, stable form of money. That part and parcel to that is the outlet of it. That it's difficult for certain people to understand. You're saying that Bitcoin's money is the best form of money that's ever existed, but how can I spend it places? And people that have come to understand that you're going to be able to because of these underlying fundamentals, they get past that. It's just that the majority of people in the world, in my mind, won't be able to see Bitcoin as money until they see it being used as money. And thankfully, that's happening more and more every day and will only continue to happen.
Yeah, we might skip the alt season, finger crossed, this year because
Yes.
it's true, Ethereum is going up, but if we compare it to Bitcoin at the denominator, it's still minus 60%. So I don't see, yeah.
And it's like, again, like there might be some, services out there that enable, people to pay for goods and services in a broad set of crypto, including Bitcoin. The reality is that one of the big ways that you can see how Bitcoin is differentiated from the rest of the crypto world is that it's actually, Bitcoin's the only one that's actually being, I would say, used, because saving Bitcoin is using it. 100% of people that are saving Bitcoin are using Bitcoin. But of the market where people are actually using Bitcoin to pay for a good or service as a medium exchange, recognizing that it's still a small universe in the grand scheme of the global financial system, it's 99.99% of any activity, in the Bitcoin / quote crypto world. And then the other way, because I always just like to find ways to differentiate it. Here in Texas, there's a lot of Bitcoin mining that goes on, but then also globally, there's probably between 20 to 30 gigawatts power. And Alessandro, what you mentioned previously about how, there's this unintuitive idea that, or that's not intuitive to people, that, a lot of people think that Bitcoin wastes energy. It's actually the opposite, that the Bitcoin will help drive innovation and stability in energy systems. And that's like a, paradoxical in itself. But that people here in Texas will say, oh, those are crypto mining, and I'll correct them, and I'll be like, no, that's Bitcoin mining. There's no energy being consumed to mine any other crypto. That Bitcoin represents 99.9999%. So, give credit where credit's due. It's actually Bitcoin that's creating this demand, and there must be some reason why this thing is different if Bitcoin is 99.99% of all of this energy demand, and all the others added up are zero. Because there's some value detachment when you start looking at the broader crypto market. But there's things that distinguish to say, hey, there really is something different between Bitcoin and this world of crypto. And the more tangible it becomes to people, the easier it becomes to see. And so, I do think as a directional trend, like alt season is over, but there are going to be little pockets of short-term moves where, someone that thinks that they're getting ahead faster can move the market, but it's only a short-term trend. The long-term trend of Bitcoin eating everything will continue to persist because of its fixed supply.
Yeah, and thankfully the ETF helped in this process to get rid of all of that, because the Bitcoin ETF had a huge volume, like 15 billion to date, and the Ethereum just failed. I mean, there wasn't a pump pre-launch. We were in this podcast highlighting that. So nobody is buying Ethereum on the ETF. So the financialization, and that prevents the rotation into altcoins. So I think it's over. I think, like you, thankfully it's gone.
Yeah.
One other point, and maybe my last question, because we are approaching the hour. Also, one part of your book is about the misconceptions. And then two questions from my side on this. Which are for you now in 2025 the biggest misconception that we need to debunk? And second, we are in 2025. For example, for me, if I hear, okay, Bitcoin is wasting energy or harming the environment, if someone didn't study energy usage and Bitcoin, I get it that he has this misconception. The same is if we live in a supply limited world, fixed supply of money, then there is a recession because they study only Keynes. But there are also some misconception that in 2025, for me, they should not exist anymore. Like, is a bubble or has no value? Like, with 2 trillion and 15 years of history, there are still people saying this. Is for you, how do you react to this? For me now, it's a differentiation between which is the misconception that they say.
Yeah. I would say that the one that people still struggle with the most is why Bitcoin can't be copied. Because combination of the why Bitcoin can't be copied and the volatility. That Bitcoin, even if it's been less volatile than in the past, that there's this just fundamental disconnect between the word money, something being money, and volatility. And still, so few people in the grand scheme of things understand Bitcoin, and that part of their inability to understand Bitcoin is, without going down a deep rabbit hole that's money, and in the way that I describe it, this fundamental economic truth that economic systems converge on one form of money, that this fear that something comes along or not understanding why something couldn't come along, why Bitcoin isn't my space, or why someone can't create a better Bitcoin. And my explanation for that is that if a form of money that can't be printed, or the fixed supply being the foundation for a form of money that can't be printed, that's the most important property of Bitcoin, and Bitcoin has the most important property in the most perfected way. That is why you can't just come along and copy it. It already exists. But still, people struggle with that, reasonably so, because money is a rabbit hole, and you have to hold a lot of concepts kind of suspended in the air at the same time to be able to put the puzzle pieces together. So those would be the two. I think there's always going to be people that think that Bitcoin's a waste of energy, or wish we could get the value derived from Bitcoin being its fixed supply and this permissionless form of money that can't be printed and that's outside of the control of the state with no cost. But that's just naive, and that the vast majority, I would say, at least of producers, maybe not the vast majority of people in the world, but the vast majority of people that produce things of real value understand that it comes with cost and it comes with energy inputs. And so I think it's going to be, and also as various energy systems become less stable, and the ones that are most stable have the most Bitcoin mining, for serious people, for people that want human flourishing and want there to be more energy abundance, they will clearly and quickly figure out that Bitcoin is a massive asset beyond just the benefits of sound money. And then I think, like, probably the one that's not in the book that I thought about considering in the book, but that I ultimately didn't, but probably will write about at some point in time, is the idea of Bitcoin being quantum resistant. But that's been one that's been around. It's less of an economic argument, although there are economic aspects to it, of the incentives behind a quantum computer. But that would be the other one, that people have this fear that Bitcoin is not resistant to quantum computing, and that they're going to stay on the sidelines until a quantum computer exists that could crack SHA-256, which, in my opinion, it's not that it's not a risk, it's that it's this recognition that Bitcoin is an adaptive system, and that ultimately it is tracking ownership using public and private key pairs, and signature schemes, cryptographic signature schemes, and that Bitcoin signature schemes have already evolved. Bitcoin addresses are far more secure today than the first iteration of Bitcoin addresses and Bitcoin wallets, and that will continue to be the case, and it is already something that is on people's radar, and it doesn't create the same type of risk, but it does create risk for every form of digital system, and that Bitcoin has the greatest ability and the greatest incentives to adapt, and that's a marginal issue because of that. And so, but that would be, I view that as like a further down the rabbit hole, but the things that trip people up on the surface are still the idea that Bitcoin could be copied, or that the volatility causes it to not be viable as money.
Thanks. Yeah, I agree. And also for one comment on volatility is also the fault or responsibility of the financial world, because they get educating thinking that volatility equal risk, while
Right.
in Bitcoin is not. Volatility is a risk. If you want to trade with Bitcoin, it's very risky. But
Yeah.
in case you want to hold
Yeah,
for many
the
years,
longer your time horizon, the lower the risk.
yes,
Because in my mind, it's the understanding how Bitcoin enforces its fixed supply is not easy, but it's a finite surface area. Understanding how many iPhones Apple is going to sell next year, or anything derivative, becomes more uncertain than Bitcoin, and that risk is ultimately in some form or fashion, in all cases, a function of relative certainty versus uncertainty. And that the thing that becomes most certain in the world of economics and financial positioning, the most certain thing is Bitcoin's ability to enforce its fixed supply, and all of the derivative decisions that get made downstream from that, which are, if it is able to credibly enforce its fixed supply, and if that surface area and equation is the most certain thing relative to all other financial risks in the world, then it becomes the stable thing that everything is volatile around. And that it represents the foundation of a form of money that can't be printed. And that's what drives adoption of everything. So it is knowable, basically. And then all other things, everything else other than that is more uncertain. And like you said, Alessandro, that volatility can be a risk to you if you have a very short time frame. The longer the time frame you have, that volatility is an asset. That volatility represents more of the world figuring out Bitcoin and volatility, the upside, or your purchasing power increasing because more people demand the form of money that you adopted long ago.
The volatility is the feature which offsets inflation. That's why we have higher lows. And well, unfortunately, as you said, to understand that, you need to study a bit. And that's maybe how it's meant to be, because it means people who are educated, who are reflexive, people who want to look into things and have also smart enough to understand we'll have more Bitcoin, which is good for this world. So it's how it's to be. Yeah.
Thanks, Parker, for all your insight. I think now we are 70 minutes, so we can say we are at the end. Thanks for all the topics we covered, from Bitcoin, not crypto, why it's the best money, and how we can what we can expect from the future. Before we finish, it would be great if you share where people can find you and what are you working on right now.
Sure. No, I want to thank you guys for having me on. I appreciate the opportunity. I also appreciate you guys being part of this movement that's helping educate the world about Bitcoin, and that Bitcoin ultimately gets adopted as more people understand it, as knowledge distributed. So all of these episodes help accelerate that knowledge distribution. So appreciate what you guys do as part of the show. And then in terms of what I'm working on, how people can find me, virtually all my energy is going into working on Bitcoin payments these days at Zaprite. So that's Zaprite. People can find us at zaprite.com. Again, what I would tell people is, if you don't yet understand why Bitcoin stores value, or if that reason is not firm in your mind, continue to read books and listen to podcasts. Bitcoin payments are not, in my mind, suited for those people. But if you understand why if you understand why Bitcoin stores value, for all of those people that understand the importance of Bitcoin's fixed supply and that it's credible, that if someone's running a business in a position to make decisions about how they receive payment, that I would encourage all of those people to be minded to do that and to consider Zaprite as part of the equation. Again, for those others who are earlier on their journey, they can find my book online. Safety and a Moose wrote a book called The Bitcoin Standard. Again, another book that I recommend. My book is available on his distribution platform, which is thesafehouse.com. And safe is spelled SAIF, like his name. So thesafehouse.com. financialization.com. And I'm on Twitter or X at Parker A. Lewis is my Twitter handle, so people can follow me there. But those are the three primary ways. I also have a blog, gradually-then-suddenly.xyz. I publish, something, every couple months, but it's usually, a longer form, so worth paying attention to. But the first three are really things to be paying attention to that I'm working on. Zapright, my book being available at thesafehouse.com, and Twitter and X, Parker A. Lewis.
Thank you, Francesco. Thanks, Parker.
No, thank you, Parker. I also we have been told to use Zapright for payments when we launch, so I know it's a fantastic tool. And yes, I recommend both Bitwalt and Zapright. And I saw you were a lot in touch with institutional. Did that part end of your life? Not going to get involved in because there is Michael Saylor maybe now. So
I won't be running a Bitcoin treasury company, or that won't be for me. I support what those guys do, and if I was choosing one, I'd choose Michael Saylor's, but not for me. And I also, when I saw the Bitcoin vault, I was like, wait, I think we might be supporting you guys, but I didn't want to say anything. So I want to appreciate you guys being on the vanguard of Bitcoin payments, accepting Bitcoin payments for your service. Custody is incredibly important, and if you ever need any product requests, just feed them through me. Getting feedback from people like yourselves that are using the platform makes the makes the platform better. That's who we're here to serve, people like yourself.
Thanks.
And
yes.
Thanks again. Thanks, Francesco, for hosting this episode. Thanks again, Parker. And maybe next, let's do another. Next year, we will have a third season. This is the second. It will be good to see what happened between now and then, also considering what we've said so far.
Let's do it anytime.
Thanks again, and thanks also for the listeners in X.